Welcome to our weekly market analysis. This analysis is for the weekend of August 16, 2025. Well, the events for this week and past week, obviously the big thing about past week was the inflation, the CPI, PPI numbers. They were two different tales, so we will review that in depth, what happened with those numbers. This coming week, we have it on Wednesday. We have the FOMC meeting minutes. So obviously, it's always interesting to see what they have to say. As far as it's happening this coming weekend, we have the Jackson Hole meeting, Wyoming, which is obviously Chairman Powell and many powerful people in the business they're going to meet. I don't know if there's anything new is going to come out of it. There's not much surprises. So, but we always pay attention to that. Also on Friday, something interesting happened. We saw some sector rotations, and we will review that. And we will see what has happened, what sectors were the really big winners, especially on Friday. Another thing we want to pay attention is this coming week. While the earnings mostly are done, well, we really have to pay attention to the retail earnings. We will have Walmart, Target, Home Depot, and many more. Stay Lauder. So we want to pay attention again is the consumer's behavior, what is happening with tariffs, the inflation expectations. So let's start with what happened last week. We had a CPI, which actually came at 0.2% as expected. The prior number was 0.3%. And then we have the PPI, which was pretty hot, and we will review what happened. Um, uh, Basically, speaking of that, let's go to talk about that the inflation number with the CPI, the consumer side, was mostly in line. The markets like that. They took it in stride, and it was at 0.2% and in July, and it was 0.3% in June. And uh, basically, this is now when we look at it year over year is 2.7%. The biggest culprit, again, it has been from the beginning, is the shelter index. It was up by 0.2%. The good news was the energy side of things. The energy index was actually down 1.1% in July, especially gasoline prices were down 2.2%. Electricity was flat, down 0.1%, and natural gas was down 0.9%. Now, one thing again, as I mentioned, we want to look at some of the culprits that, such as the insurance, the auto insurance, especially up 5.3%, shelter 3.7, medical care 3.5, and household furnishing 3.4, and recreation 2.4. But the PPI was interesting. It was up really hot, 0.9%, and there was no change in June actually, and in May we were up 0.4%. Now what we see is year over year we are at 3.3%, which is the highest since February. Now where did this mostly come from? It was actually the services. So what is happening is again that telling us that there is uh, roughly three-quarter of the gain was basically based on the services. And what we look at is half of the all the goods prices advance was due to 1.4% in the food, and also 0.9% energy, and 0.4% in goods, excluding food and energy. Now, when I go to the core PPI, which excludes the volatile food and energy, it actually was up 0.6%, and that is the largest monthly increase since March 2022. For the 12 months ended in July, the core PPI rose 2.8% compared to 2.5% in June. I want to show you some figures and what we see, what these red dots are compared to the previous one. So we see again medical care, transportation, household furnishing, the water, sewer, trash collection services. We see, for instance, we had improvement in the household furnishing compared to the previous month, or when recreation commodities, but other things were again ahead. Energy was down 0.1%, and food was flat. Education and communication was down 1.3%. I also want to share this graph to going back to mid 80s to see where inflation has been. And of course, what we recall in 2022, where we had gone and where we are now, but look at after 2009, where we had gone. So I just thought as a again barometer where we are. This coming week, well, we have our neighbors up north. Canada will have their CPI numbers on Tuesday, inflation numbers. As I mentioned, Wednesday we want to check the FOMC meeting minutes, and we will have quite a few FOMC members speaking, so it goes along with the meeting minutes. And of course, on Friday we have Fed Chair Powell speaks, but then after that we will go to Jackson Hole symposium, and of course also on Saturday. So it will be Friday, Saturday, Jackson Hole. Saturday also we have the um, European Central Bank President Lagarde is going to speak. Now, one thing we see that despite all the numbers with the inflation and things, the market, the reason they've been going up, they are pretty sure that the rates will be dropped in next meeting in September 17th, meaning there is 92.1% that the Fed is going to reduce the rate a quarter of percent. Um, with that, we can see again steepness in our yield curve. We are a little, the rate went down a little bit compared to previous month. And you can see, although we've gone a little up, when we look at UK gilt, it's a little steeper. We were basically up a little bit. But the rates, again, their markets are taking into consideration, yes, we are going to have a rate cut. So what kind of a week do we have? Well, the Dow Jones was down, I mean, it was up 1.74%, almost to the high of July 23rd. NASDAQ was up 0.81%, hit all-time high August 13th. It's only down 0.42%, and S&P was up 0.94%. With that magic number we hit, that went over 6,500, came back down, and we are only 0.29% below August 14th. Gold retraced again, and they're down 2.13% for the week. Copper was really flat, up 0.41% after a big sell-off, and crude oil was down 0.77%. So as a whole, the markets were up 1.005%. The majority of that came from the US small caps, almost 3%, versus the large cap of 1%. So when we look at the markets, again, they are comfortably above their 20 and 50-day moving average, whether it's Dow or um, NASDAQ or S&P, Wilshire 5000. We did have a sell-off on Friday, and we'll talk about that. And then the yields after a big drop, well, we had the PPI number, and then they have climbed back up. So we've got to really watch that, especially for the mortgages. So we'll see what happens. The dollar is sitting right on its 50-day moving average. Commodities were down, but obviously thanks to crude oil and also gold, though broke below its 50 and 20-day moving average. VIX, the volatility is right around that 14, 15 area. Again, I would not be a seller of options at this time, the premiums. As far as the sectors, we see there was some kind of a rotation, especially on Friday, which I will discuss further. Um, Based on relative strength, we see that communications, S&P 500, and then discretionary, they've been the strongest. Then look at what happened. Well, healthcare has risen from that big move. Well, the big contributor, few of these reasons. Number one is that we had a lot of FDA approvals, especially in biotech last week. But also, of course, the big news was Berkshire Hathaway, uh, again, Warren Buffett's uh, 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 company. They've been a big buyer of the United Healthcare. We also see technology, utilities, and then we see the staples again. We're strong there above their 20 and 50-day, and then financial right under 20-day. When we go internationally, we see the strongest based on relative strength. There's Spain, we look at Austria, Japan, we see Italy, then IFA, and United Kingdom. The weakest based on relative strength the last 2 months, we see India, Netherlands, South Korea, and Switzerland. As far as the sentiment, we see the sentiment after being positive above average 2 weeks ago. Now, this past previous days, we are back to almost under 30%. And the bears really have moved up from that average of 31%. Now we are 46%. So there's a little concern. This was as of Wednesday. On the other hand, when you look at the CNN fear and greed, well, we are at 64 and we are still in that middle of greed. Again, I like the extreme, so this gives us a little bit, but not too much. When I look at the Citigroup panic euphoria, that also in a euphoria, the blue section above the point 0.4 neutral. So that also tells us that the markets are, well, a little basically too enthusiastic. I've had this. This is called Delta market sentiment. It looks at the number of intermediate term moving average crossovers. If you're above the 50, that's positive. That is more stocks are above this point, so that's bullish. If you go below that, it's well bearish. More stocks are below those averages. We are at 64.8, so that should be positive. But again, when I look at these kind of sentiment, I look at the extremes. Let's look what happened in April. We were at 20, so I like to see that, or in November. So basically, I look at the extremes, and basically what we see is yes, the blue is bullish. It means there are more stocks going up. But when the rubber band is extended and stretched, I like to take advantage of that. I mentioned about Friday. Look what happened on the sectors. You see, there were energy up a little bit. We had staples, real estate, and of course, healthcare, big time. Other the big ones, the technology was down big time, utilities, and basically we saw some rotation. And another thing I do visually, I see like, look at this healthcare, everything is green. But when I look at some of like you see the financials, a lot of red. So that's how I make seeing that there are some rotations going on, and we look at the advanced decline line. And also with the Magnificent Seven, we see, well, only Google and Meta were positive, the rest were actually negative. So let's look at on a daily. We've talked about this again, 62.72. We see how nicely we've been above that. Every time we come to this number, we have bounced on the futures. So we are above this, and we could see the 66.63. One thing is I have to mention that this is uh, basically a middle of August, so volatility is about to come back. When we look at some of the moving averages, we see we are nicely above our 8, 21, and 50 exponential moving average. So those are our support, and we are above that. As far as the Bollinger Bands, we see we touched the Bollinger Band. We are becoming embedded. MACD is pretty flat on the positive side, but now it looks like the Bollinger Bands are about to open up. As far as the weekly, we see we are actually on a weekly embedded, and MACD is positive, and we are above our nicely above our big support zone. and not close to our Bollinger Band. Nasdaq daily again above 18 day. We are about to embed it. MACD is flat, and when we look at the Russell, which was big winner the first prime time beginning of the week, we hit that Bollinger Band. What did we do? We are overbought at this time. We need one more day to become embedded. MACD across, so came inside, but we are above that 18-day moving average. Dow was on a weekly basis. We see how nicely we have hit that 100-week moving average and bounced back, but we just turned overbought. So this coming week, we'd like to come back, and then if it's embedded, that means, well, it's time to move higher. As far as the Dow, again, the United Healthcare helped it, but we are overbought, although MACD has crossed. As far as the transportation, we just broke above the 18-day moving average. MACD has crossed the positive, although flat, but we are overbought, so we want to pay attention to that. VIX, well, it's just again right around that 15 point. So it has become embedded, so that bodes well for the bulls. But I will watch. I think there will be some expansion associated with VVIX. The yields after going down nicely last 2 weeks, so the last 2 days after PPI numbers come up, momentum is up. Now is about to cross. The only good thing is we are heading against the 100-day moving average. The opposite is on 10-year, 100-day moving average is short. We were overbought, and now we still positive momentum, but it's we are above the 50. But we want to watch that, hoping that we bounce off this 15-day moving average. So we want to watch those rates, and I like to see again what's going to happen with those minutes, and Jackson it will be another story, so markets will pay attention. The 30-year bond is right on this 30 on this 100-day moving average. We also have the dollar. Again, I think there's a lot of politics involved with this move as well. We are below 100 and we are below 18-day moving average. Oversold the euro opposite above the 15 and 100-day, but it is overbought. Gold, well, talk about that is a consolidation sitting right on 100-day and sandwich between the 18-day and 100-day. MACD is flat to down and momentum is down, but that 100-day has provided a big support in the past. Silver is nicely above its 100-day and is hugging its 18-day moving average. Momentum is positive and MACD is flat to negative. Copper after big sell-off is just consolidating. It's embedded. MACD is negative, although momentum is turning a little bit, but we are below 18 and 100, and 18-day is crossing the 100-day. Bitcoin also again, after hitting that big time 125,000 plus, that was the Bollinger Band. It was overbought. It came down. It's right around 18-day, but nicely above its 100-day on a weekly basis. We were overbought, but then the momentum is up. MACD is still positive, and we are above the 18-week moving average. Expected move. The markets again do what they do best. We have gone S&P hit 3 times, hit its upper edge of expected move and came down, so it stayed within its expected move. The same thing with Nasdaq. After hitting all-time high around its expected move, came back inside. The only Russell was strong, so it was way outside all the days, and the same thing with the Dow. When we look at the 20-year TLT, the bonds, we see the opposite was they went to the lower edge of expected move, and that was the support. As far as the gold, right outside its expected move, silver stayed within its expected move, and then financials did go outside 2 days, and then on Friday they came back in. As far as energy, it was right in the middle. It was positive for the week, but it was within its expected move. And we see the Bitcoin after hitting that big 125,200 came back. Inside its expected move, and not much movement in crude oil. It was basically just right inside its expected move. Awesome. We will move and go on to our trade of the week. Thank you so much.